All right, we got to talk about this concept of buying the dip. Buying the dip. Stock goes down, buy the dip, bro. Hold on to cash, buy the dip. Stock goes up, don't buy it, bro. So the whole concept of buying the dip is when a stock goes down, obviously we all know it's going to bounce right back up. So you just want to buy the dip because we're always bullish. And on YouTube, if you're always bullish, regardless of how trash the company is, you get rewarded with massive amounts of subscribers, massive amounts of sponsorships, and ad revenue. But let me tell you what I think about buying the dip, okay? Buying the dip is stupid. Let's think about my investment philosophy. What I do is I focus on raising my income. I have a full-time job. I just got a raise by starting a new job. I have tutoring. I have YouTube. Oh, God. I do all sorts of crap where that helps me raise my income and lower my expenses. Helps me raise my income and lower my expenses. And then I can use that to continue to max my tax advantage accounts, my Roth IRA and my 401k, which sadly I didn't have this year because of my current job. And I don't time the market. So every time I have spare cash, I throw it into an index fund. I don't sit on cash because, in my opinion, if you're buying stuff now and you're not selling it for 30 freaking years, 30 years, 40 years, if you're in your 20s, it really doesn't matter what price you pay for it, okay? Look at the long-term returns of the market and consider the fact that I think the world is going to be a better, much richer and wealthier place in 30 or 40 years. If you buy the S&P at 90 or 100, but if there's an index that trades around there, does it really freaking matter? No, it doesn't, okay? So the whole concept of, well, I'm just going to sit on cash and I'm going to wait till the index goes down and I'm going to buy it is ridiculous, okay? Number one, like I said, in the long term, it doesn't freaking matter, okay? If you think the economy is going to be better, much better, the world's going to be a much better place in 30 or 40 years. It doesn't freaking matter. It's like chump change, okay? Number two, you may think there's going to be a dip because, you saw a couple news articles. You saw, Andre Cheek's stupid face going, and it's the end, the Fed was done, oh my God, even though I don't know anything about interest rates or anything. And, you're like, so obviously stocks are going to go down, so I'm not going to buy stock. I'm going to wait to buy my index. Why? You could be totally freaking wrong. The index could freaking moon in the next month or two. Nobody can predict the freaking market, okay? These clowns that do that, I think the market's going to crash 27.565 for 3% tomorrow because they're a bunch of freaking losers. They're just trying to scam you, take your money. But if you can't predict the market and you think the market's going to be much higher in 30 years because the world's going to be a better place, we're going to have better technology, we're going to be more productive, we're going to hopefully be more, globally together instead of torn apart. We'll see about that. Then there's no point in buying the dip because there should be no spare cash to buy the dip. Now, whenever I get spare money come in, okay, let's say I get a $500 or something for, grifting something. Well, I immediately take that money and I throw it into VT Wax. I don't even think about it. I don't hold on to that $500 that came in because I'm investing for 30 or 40 years. Why would you hold the cash trying to get a little money, buy the dip, save money, when it doesn't freaking matter, okay? So buying the dip is stupid. If you follow the Boglehead philosophy, max your tax advantage accounts, invest all your investable dollars. You should obviously have a savings account with emergency savings, but every time you have money come in that's in excess of what you need in the short term or for your savings, just freaking invest it, okay? All right, time to go to work. Cheers.